Welcome to the Explainer. If you're trying to cut through the absolute noise of the stock market and just find a logical, structured way to trade, well, you're in exactly the right place. Today, we're breaking down the core concepts from Robbie Burns' incredibly practical guide, The Naked Trader's Book of Trading Strategies. So let's just dive right in and build a trading toolbox that actually works in the real world.
You know, when most people picture a stock trader, they instantly imagine someone sweating in front of 6 glowing monitors, frantically clicking a mouse. Well, let's completely subvert those expectations right off the bat. Burns champions what he calls the tea and toast trading style, and it's exactly what it sounds like. This philosophy requires absolutely zero complex technical analysis and definitely no all-day screen staring. It's all about being disciplined, sure, but also relaxed, meaning you can deploy these strategies simply and get back to the actual business of living, like, say, enjoying a nice cup of Yorkshire tea and some hot buttered toast on the sofa.
So here's our roadmap for this explainer. 1. The tea and toast philosophy. 2. The bare necessities. 3. Making a trade plan. 4. Top of the stops. And 5. Real-world trading strategies.
Starting right off with Section 1, the tea and toast philosophy. The whole classic bull and bear dynamic can make the stock market feel like this fierce, non-stop battle, right? But Burns makes a great point. You simply don't need all that complexity or technical gobbledygook to actually make money. Honestly, day trading and obsessing over every minor forex fluctuation, that usually just leads to burnout and, frankly, lost money. Instead, his whole approach is about making gains over the longer term with patience and a good dose of common sense. By tuning out the frantic hype and avoiding these elaborate, skyscraper-like trading systems that totally collapse if you miss a single step, you're protecting both your capital and your sanity. Moving right along to Section 2, the bare necessities. Okay, before you even look at a stock chart, you have to know if the company is actually healthy. And there's a brilliant, simple trick to quickly cut through all that corporate jargon. Burns uses a financial data platform like ADVFN to search company news for very specific phrases. It's basically a rapid-fire sequence of good versus bad. If a company's reports are just packed with positive phrases, think exceeding expectations, favorable, or transformational, boom, it earns a closer look. But if you spot words like below expectations, unpredictable, or challenging, you bin it immediately, no second thoughts. It's a ruthless but highly efficient filter.
Now, once a company actually passes that keyword test, it faces a rapid-fire foundation checklist. First up, net debt absolutely must be less than 3 times the pre-tax profit. Anything more than that is just too risky. Next, the market cap has to be above £20 million just to ensure there's enough liquidity to safely trade the thing. Also, the spread, the difference between the buy and the sell price, cannot be more than 5%. Burns also actively avoids oil, energy, or really anything labeled a sucker stock. What he does want to see are rising dividends, because that's a sign of true corporate health. And finally, a nice, simple, upward trending chart. If a stock fails these, you just walk away.
And that brings us to a really fantastic mental model called the Billionaire test. Before buying anything, Burns pretends he is a literal billionaire looking to buy the entire company outright, not just placing a few grand on a quick trade. Think about it. If you own the whole thing, would it actually make your money back? Are the underlying economics truly sound? If it wouldn't interest billionaire you, then trader you should probably stay far, far away. It is such a powerful way to ground your trading in reality.
Which brings us to Section 3, making a trade plan.
Listen, even seasoned pros with decades of experience never ever skip writing down a trade plan. Why? Because it completely prevents lazy thinking. Here are the 5 absolutely non-negotiable elements you need to jot down. Number 1, your goal. Is this a quick flip, or are you holding for the long haul? 2, your thesis. Exactly why do you expect this price to move? 3, what's the current price and what are your target sell alerts? 4, the volume. How many shares are we talking about here? And 5, perhaps the most critical part, what is your safety net? What's your stop loss? Having all of this written down means you'll never find yourself freezing in the middle of an active trade, frantically asking, what do I do now?
Next up, Section 4, top of the stops.
So the absolute crux of this whole system is understanding exactly what a stop loss is. At its core, it's simply a predetermined price where you automatically sell a share to prevent further losses. Now, some traders out there think stops are for wimps, right up until the market suddenly turns against them. The absolute biggest danger in trading is holding on to a stinker, watching it drop, and just getting emotionally attached because you don't want to admit you made a mistake. A stop loss takes that emotion completely out of the equation. It just executes automatically.
If you want to see why trading without a stop loss is a catastrophic mistake, just look at the trajectory of the clothing brand Boohoo. As the share price tumbled from over 400 pence all the way down to nearly 50 pence, investors who didn't have a plan just kept holding on, desperately hoping it would magically bounce back. Let me tell you, a predetermined stop loss at absolutely any of those downward points would have saved a trader from a massive portfolio-crushing loss.
And we have another pretty brutal example here with Aston Martin. Burns perfectly describes this kind of trajectory as a car crash in slow motion, and you can really see that agonizing steady decline. Without a stop loss, you just become paralyzed. But setting that hard line in the sand before you even buy ensures you get taken out of a bad position cleanly. You take a small, totally manageable paper cut instead of suffering a fatal blow to your entire trading account.
Okay, so how do we actually set one of these up properly? Let's figure this out, using ME Group as our example. Now, Burns doesn't just use random arbitrary percentages. He actually looks back for previous support levels. In this case, he bought ME Group at around 75 pence, noting that the shares had previously found some really solid support at 68 pence. But here's the catch. You always have to account for that spread we talked about earlier, the gap between buy and sell prices. So Burns placed his stop just a little bit lower, at 66 pence. That leaves you enough breathing room to avoid getting spiked out by just normal, everyday market noise, while perfectly protecting your downside.
And finally, Section 5, Real-World Trading Strategies. Let's get into our first real-world strategy, trade the news. Think back to early 2020, right during the COVID lockdowns. Burns asked himself a very simple, common-sense question. What companies are actually going to benefit from everyone being forced to stay home? Well, while chatting with his wife, they realized that bored people staring at their own walls all day would inevitably start doing DIY home improvements. And where do people in the UK go to buy DIY supplies? B&Q, which is owned by a company called Kingfisher. He checked the chart, saw the shares were totally beaten down with the rest of the market at 150 pence, and he just bought in.
And what was the result of that incredibly simple, totally logical observation? Well, the shares absolutely skyrocketed as the DIY boom took hold. By October, Burns sold his position at 304 pence, banking an astonishing £7,690 in pure profit. I mean, wow. This just perfectly illustrates that you really don't need complex algorithmic analysis to win big. Just paying attention to human behavior and trading the undeniable news trends happening right outside your own window is an incredibly powerful tool. Which brings us to a second, surprisingly simple strategy. Talk to the staff. It is actually amazing how much on-the-ground intel is just waiting for us in our daily lives. Burns discovered this firsthand during a totally routine visit to Aspire Healthcare Hospital for an injection. While he was there, he didn't just sit around reading old magazines. He casually chatted with the nurses and the porters. And you know what? They all told him the exact same thing. We have never been this busy, and there's no sign of it stopping.
That little passing conversation, that was a massive trading signal. Burns went straight home, checked Spire Healthcare's financials just to make sure there were no hidden red flags. Remember our bare necessities check from earlier? And he bought shares at 137 pence. Lo and behold, as the company's profits swelled from that exact demand the staff told him about, and a buyout pit eventually happened, the shares leapt higher. He sold at 251 pence, locking in another massive £7,000 of profit. And he did all that just by keeping his ears open in a waiting room?
Which leaves us with a final thought to chew on. We've seen today that by utilizing a relaxed mindset, sticking to strict foundation checks, using written plans, and setting those emotionless stop losses, trading actually becomes so much less intimidating. But the real magic? That comes from just keeping your eyes open. The Kingfisher DIY boom and the busy hospital staff prove that the absolute best intel isn't flashing on some stock ticker, it's happening right in front of you. So as you go about your week, whether you're at the supermarket, hitting the gym, or getting your car fixed, I want you to ask yourself, what profitable trading signals are hiding in your everyday life right now? Thanks so much for joining me on this explainer, and hey, happy hunting out there!